Wow, what a day we had today, huh? When I woke up this morning, I saw that the markets opened sharply down. I was pretty frustrated, I'll be honest with you, because I really had been hanging my hat on a gut feeling that when the markets would start to respond to Russia going into the Ukraine, I thought that it would have been similar to when Russia went into Crimea in 2014. But it looked like as the day went on that maybe that wasn't going to happen. It didn't look as though we were going to end up in positive territory. But lo and behold, at the end of the day, thankfully, which it was pretty remarkable, 1,000 point swing. That was really remarkable. Now, this day has been very interesting, and it's definitely one for the books. Now, so far, stocks have gotten off to a very rocky start in 2022 with the potential for Federal Reserve rate hikes coming and the geopolitical worries over Russia and Ukraine. They're only adding to the uncertainty. Now, I don't want to minimize the impact of that major geopolitical event, but there is some positive news out there, even though it might not feel like it right now. So, starting with Russia and Ukraine, the truth is that the U.S. economy and the overall stock market likely will not be very impacted by this recent event. In fact, stocks took most previous major geopolitical events in stride. So looking at more than 20 geopolitical events, such as the attack on Pearl Harbor, for one, 9/11, and when we look at these events, the S&P 500 index fell only about 5% on average. Now, with anxiety running high, here are some important numbers that should really help calm some of your nerves. So, the S&P 500 index officially moved into a correction of 10% this week, and that's for the first time since March of 2022. Now, since 1950, there has been an average of 10% correction per year. So some volatility was very likely right around the corner. We've been talking about that for quite a while now. Now, on average, the index sees a peak to trough correction of 14% in any given year. And even in up years, there has been an 11% correction on average. So after a correction of 10 to 15%, the index has seen an average one-year gain off of the lows of 22% and has gained in 12 of the 13 one-year periods. So that's encouraging news. Now, remember, we're in a midterm election year, and that tends to be among the most volatile years in the 4-year presidential cycle. Now, in fact, the average midterm year sees a peak to trough pullback of 17.1%. But stocks are up more than 30% off of the lows on average a year later. So, here's some good news. Good news is that corporate America continues to see strong earnings, and I don't want that to get lost, okay? That's important. The S&P 500 earnings per share in the fourth quarter, they're tracking 31% year over year as an increase according to FactSet. Now, roughly 10 percentage points above the consensus estimate when the earnings seasons began. The top line growth was extremely strong as well, with revenue growth up close to 15%. Now, lastly, profit margins saw actually very little compression because as companies with pricing power, they've been able to pass along these higher costs and largely preserve those high margins, which are well above pre-pandemic levels. Now, finally, COVID-19, of course, we have to mention this. Trends are very positive as well, with new cases down more than 90% from January's peak, and that's according to Johns Hopkins University. Many states are starting to lift their mask mandates, and a strong reopening will likely take place over the coming months and into the summer. Backlogs and bottlenecks, they continue to slowly trend in the right direction. So we're looking at some positives there. And the labor force remains quite healthy as well. Now, the concerns and the uncertainties, they're definitely real. And the road ahead is likely filled with more bumps and bruises. However, with U.S. consumers and businesses in solid shape, I think the U.S. economy could grow as much as 4% this year. That's much better than the pace of the last recovery. Now, they say it is always darkest before the dawn. And long-term investors, you need to keep this in mind as better times are likely coming in 2022. So if you have any questions about this, feel free to reach out. I'm here. You can call the office 518-203-1983. Thanks so much. Have a good evening.